Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, overnight, after the market waited for the release of the FOMC rate decision, once released, the market plummeted to a low of the objective of 75.15.25 after recording a low of 75.28. The market rebounds slightly and now puts in a question of whether we have seen a low or not. I believe further tests are coming through to the downside. The MACD, the RSI and stochastic is all very much holding to a negative stance and therefore does support the market to test further to the downside and not at 75.15.25 but more to an objective of 74.55. Any advances should and again fail towards the 76 region as the bears continue to watch over this level along with the 60-day moving average. Well, the dollar index was a bit mixed. After rallying up to a high of 94.02, plummeted back to a low of 93.50 this morning and is still there. This in terms is actually put a little bit of a slight bias to the upside for the euro. Later today, the ECB is looking to release its interest rate decision, and more importantly, the market will be keeping a very close watch on what the statement says to see if whether or not they will start to unwind their QE. It has been noted over the press in the last few days that it is in their intention to start doing so. This morning, the Federal Reserve did hike rates as widely expected by 25 basis points after its June meeting and suggested that there was 2 more to come this year. Now, my view has always been that possibly 4 was on the cards, and from this morning, the Fed has confirmed this. According to the Fed's so-called dot plot, which tracks participant expectations for interest rates, the members now expect, as I say, 4 this year from previously 3. The notion of the more aggressive Fed rate rise concerns are about borrowing costs dragging the economy and also ultimately weighing on the market. The Fed did change some of its phrases in its statement by saying that positive economic growth and higher inflation was expected. So this would actually should see eventually a stronger US dollar. So I'm still a seller into rallies towards 118.5, and I do expect to see eventually the market target the 116.90. Well, dollar yen very disappointingly once again to the top side after taking on the challenge of 110.50, failed to continue after posting the high of 84. Has dropped back. Some concerns though are still with the market after the looking back to the politics that President Trump and North Korean leader Kim Jong-un, after signing the agreement, there is still a little bit of cloudiness to what's occurring between the two. However, the Secretary of State Mike Pompeo said this morning that that he looks to hopefully denuclearize the Korean Peninsula by the year 2020. This is quite a big call from the US, as nothing has really been confirmed. And the other thing that's really concerning is that was noted in the newspaper is that the credibility of the claim of removing the nuclear weapons is under a little bit of a risk that North Korea may still retain the warheads, and the missiles to launch them has not been agreed to any specific progress to get rid of them. So there's a lot of mixed messages in the press lately. So just be a little bit wary, be a little bit on your guard, should I say, in terms of how the market will perceive this. Nevertheless, I believe the market is a buy for dollar yen towards the region of 109.55, 60 area. So any pullback today will be an opportunity under 110, as I believe the market will take the challenge to the upside again and take out 110.50 and look towards 111.15. The pound hasn't really gone anywhere in the last few days and continually maintains within the range of 132.70 to 134.50. I believe the market, since the rejection from there, can fall lower and look towards that bottom side of the range. We've still got to come this month is the Bank of England, which is on the 21st, and but no expectation of a rate hike is viewed, but this could all change in a heartbeat. The gold isn't going anywhere either, still locked in an 88 to 067 range, and still questions whether we've seen a base or a base is still quite slowly being established from the low 80 region. I believe the market will take the challenge high and eventually look up towards 1,324. So dips, still a way to go. And looking towards the top side of the range, 66.80 figure is now capping the market for oil, and I do expect to see a rejection from there, with the technical implications from the flag to the bear case and the break of the trend to the bear case should look towards 62.40.80. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the rest of the day that's ahead.